Hello and welcome to Smaulgld. In case you missed it, top gold and silver stories for the week ended October 8th. The gold-backed yuan story forks again as more cracks appear in the story. I'm going to cover that today. More versions appear of the gold-backed story. Germany becomes world's largest gold consumer. China on lockdown as Communist Party Central Planning Committee meets. U.S. Mint gold and silver sales continue to languish, and we're going to ask, does gold make you smart? Let's get to that top story. Now, on September 1st, in the Nikkei Asian Review, headline blurted, China sees new world order with oil benchmark backed by gold. That had the gold community in a tither. Look what's going to happen now. China's backing the yuan with gold. Gold 20,000, 10,000, 50,000. And the first sentence read, China is expected shortly to launch a crude oil futures contract priced in yuan and convertible into gold in what analysts say could be a game changer for the industry. Sounds good. But the only official release related to this story about China was that they are planning to launch a yuan-denominated oils futures contract. There's no mention of gold. There's a link right here. You can see the discussion on how they're testing the yuan-denominated oils futures contract. There's no mention of gold backing or exchangeability on the Shanghai Gold Exchange. But as usual, the alternative financial media is run with the gold backing as the next story to hype. And this goes in line with my theory that, like many journalists, like Dan Rather, the alternative media enjoys the fake but accurate. If there's some potential truth that the story might be true or could come true in the future, you might as well report it as happening now. Now, there's different versions of this gold-backed story. The first one that came out was it would be a gold-backed yuan, and it was initially pointed out by myself and others, well, that would just drain gold from China. And it didn't make a stitch of sense why they would offer to pay in gold when they've got $1.2 trillion in U.S. treasuries to spend on gold. Now, the counter to that is, well, they want to get the yuan out there. They want to make the yuan a more viable currency. Currently, less than 1% of overall global reserves held by central banks are held in yuan, and there's a reason for that. We're not going to go into why the Chinese yuan is not a desired currency, but obviously we'll let the market speak for itself. So then it was pointed out that if China were to back its contract with gold, and that the gold was going to come from the Shanghai Gold Exchange, the hole in that story is, well, you can't export gold out of the Shanghai Gold Exchange. Okay, well, then the story, it would have to come from other places in China, like the People's Bank of China's gold reserves. And again, you'd be draining gold out of China. It wouldn't make much sense. And then people realize, oh, okay, well, how do we get around the Shanghai Gold Exchange? Well, the gold will be sourced by China somewhere else, out of London. Well, this is the gold bug's dream, because now if gold is coming from London and China is arranging for the purchase, it's going to drain the Western reserves. The next thing you know, gold is $13,000 because there's all this demand for gold. And of course, China's smart, and they're not going to give up their gold. What are they going to do? They're going to arrange for its purchase from London. No. The third one that came out, and this is Jim Rickards. This one makes sense, but it doesn't really do much for the price of gold is. He was explaining on X22 report the other day that it would involve a series of contracts. Now, once you hear a series of contracts, you realize you're dealing with paper. You're not dealing with gold. He says the oil producer would sell the oil in the yuan, who would then buy gold on the Shanghai Gold Exchange. But because they weren't certain of the yuan, that's why they were buying the gold. But then because they're not certain of the gold price, then they would effectively or immediately sell short gold on the Shanghai Gold Futures Exchange to hedge the price. Okay, well, that just sounds like a lot of paper shuffling and paper trading, because they don't like the yuan, so they want gold, but they're not sure of the gold price, so they're going to then sell short the gold that they buy on the Shanghai Gold Futures Exchange, which in a sense is a wash, and it basically just locks in their price. They don't want to lock in a yuan price. They figure they'll lock in a gold price. Well, that doesn't increase demand, because if you buy and sell at the same time, you haven't done anything. You've just shuffled paper around. So that is essentially a wash trade with no real impact on the price. And currently, that gold that they buy and then sell short would remain in China. I'm not sure that, I mean, you saw how the Germans had trouble getting their gold back from the Fed. It took them a couple of years, and there was an understanding that they could get it back. Well, here they understand there is no understanding. They basically say you can't take the gold out of the Shanghai Gold Exchange. However, the arrangement, if first of all, there's no announcement that says this is the arrangement. This is just people saying this is what's going to happen. The first three scenarios, they all say this is what's going to happen. There's been no announcement that is going to happen. But if the third one did happen, it would be significant because it would help the yuan gain more currency in the international markets. But again, it's less significant from the perspective of adding real gold demand. Because right now, if an oil producer wanted to buy gold with their dollar proceeds, they could. Accepting yuan for oil may make it more likely that they'd want to buy gold rather than hold yuan. That's true. But that's not a big endorsement of the yuan. And calling this whole thing gold back is a misnomer. This is not swapping oil for gold. It's engaging in financial shenanigans. If indeed this is what they do, there's nothing even says that this is what China's offering. It's just a bunch of financial shenanigans, and it's essentially dumping the yuan for two gold contracts, one where you buy and one where you hedge by selling. That's not really a big deal. It sounds more like China trying to figure out how to get people to use the yuan rather than getting gold in people's hands. And here's an example. Let's say Saudi Arabia sells oil to the U.S., which they do. They take their dollars, and they're concerned about the situation, the price of wheat. You know, they have to feed their population, so they buy gold. They buy wheat futures on the U.S. exchange to hedge against the rising price. You're not going to call that a wheat-backed dollar. It's just a financial transaction involving dollars after they sold oil. Now, Jim Rickards writes on September 22nd, China just announced that any oil exporter that accepts yuan for oil can convert the oil to gold on the Shanghai Gold Exchange and hedge the hard currency value of the gold on the Shanghai Futures Exchange. I didn't see any announcement. And Egon von Greyerz, gold commentator, was on King World News, and he says none of this has been confirmed. And yes, we have seen no announcement. So even in example 3, which is the most likely if there were to be some type of gold convertibility or gold-backed yuan, I don't really even see as significant. As we said all along, there is going to be a oil futures contract denominated in yuan if somehow China wants to convince the people who are getting the yuan to convert it on the Shanghai Gold Exchange into a buy-sell transaction simultaneously. I don't see what the big deal is. And again, I don't even know if it's going to happen. So this is the problem I have. All these stories are out there. None of them are sourced. This is all speculation. And what I do with the speculation, I first point out that it's speculation, and then it doesn't even make sense, the speculation. So if I had to bet money, the only one that might happen is the series of contracts. And again, that's not a story to get that excited about. It's significant to pay attention to. It's all part of the long, slow process of China trying to get acceptance of the yuan. But again, if you have to throw gold into the mix and you're not really giving out gold, and you're not really backing yuan, I don't see how successful that's going to be. I could be wrong. All right, let's get into the other stories of the week. If you like these types of reports and analysis without the hype, please consider donating to Smaulgld via PayPal or becoming a patron and donating a small amount each month. You can do so through the links below this BitChute, this VidMe, this YouTube, also through the Smaulgld.com site. And you can also donate via Litecoin and Bitcoin as well. Well, let's get to the gold and silver. Gold closed flat, although it did a nice rebound on Friday to 1276, and silver managed a gain of about 1%, still under $17 to 1681. As a result, we saw a little bit of movement downward in the gold silver ratio to just under 76 to 1. Remember, gold and silver are not the same metals. They have different properties, different uses, and relative rarity is not the only way to arrive at price. You keep hearing gold silver ratio not sustainable. Like hell it isn't. It's sustainable well over 16 to 1, well over 30 to 1, well over 40 to 1 for the last 50 years. Silver is a spike and dive metal. When it goes up, it will go up, and historically it doesn't stay there very long, and then it dives down. But any event, that's what history shows. Could be different in the future. Maybe next time, over the next 15 years, when silver finally makes its spike, it won't dive right away. Maybe it'll stay up there. This idea that it's got to be 16 to 1 on relative rarity, that is not a valid argument. There are many things that are rarer than others that are still priced cheaper, and silver's one of them. And silver's not even rare. Silver's supposedly a 16 to 1, and then some will say it's even rarer than that because the amount of above ground silver, the amount of in ground silver is less than 16 to 1. So what? The example I like to use is my artwork is rarer than Picasso's. Picasso's is worth a lot more. Why? It's more desired and it's better. Do the analysis with silver, it's the same thing. And the idea that silver is more useful than yeah, copper is useful too. Copper is very useful. Copper perhaps is used even more than silver in total amounts. So your life would be also different if copper went away. So the idea that somehow, because silver is so useful, it's got to be worth 30, 50 times the price when a reset happens. Okay, sorry about that. Let's continue now during the week. Here's something. Now, one thing about revaluing gold, that's a common theme, that if we would just revalue gold to a certain price, that would make sense for China, and it might. But here, I did the math on what People's Bank of China has. Let's say this is what they report they have. And remember, it's the People's Bank of China, not China. Obviously, there's other gold in China, and it could be brought into the People's Bank of China. But right now, the gold that they list on their reserves is worth $77 billion, which is a spit in a huge bucket. That's nothing in terms of world global finance. All right, well, let's say they don't report 1,800 tons of gold. They report they got 5,000 tons of gold. Well, at today's prices, so what? They'd have $208 billion. What's $208 billion? A month of QE. Nothing. That's China, People's Bank of China boosting their gold reserves up to 5,000 tons. Let's say they raise it to 10,000 tons, which is a pretty hefty number and in line with a lot of analyst estimates, of some trying to say it's even higher. But even so, those 10 tons would be worth $417 billion. And I say big deal. Now, well, but China, they can revalue the price of gold. All right, so revalue it to $3,900. Those 10 tons that we're not even sure they have. You know what that comes out to? 1.2 trillion. That's the value of what they have in U.S. treasuries. And now you're talking a big increase in price, a 3 times increase, that somehow China is going to just wave a wand and increase the price of gold. I don't think it would happen in a wave of a wand. It would have to happen over a long period of time. And even so, I don't want to denigrate trillions of dollars, but that's where we are today. So $1.2 trillion is not really that big of a deal. Now, while we're on China, see, one of the things I'd like to point out to the people who are praising China as somehow going to be the saviors of the global economy because they're prudent, they play the long game. You don't play the long game by building ghost cities and bridges to nowhere and then realizing that now that you spent all this money on borrowed debt, that the people that got rich off it in China want to buy Bitcoin and send it out of the country. There's no long-term planning there. It's act as you go. Central planning never works. Why? Because the central planners can't think of everything in the market, especially the size of the Chinese economy. The fact that they have gold doesn't make them smart. It just means they also have gold as part of their central planning. They've got a debt to GDP ratio of 300%. Yeah, so here's just a quick story, how inside China's ghost towns, developers run out of money. This is not playing the long game. This is just trying to satisfy an immediate need to boost GDP, to get people employed. That's about it. And now they're going to meet. They're going to try to figure out what they can do to make sure the wheels don't fall off this train. What's this? 21 million, only one Bitcoin. Bitcoin equals 24 karat gold. Bitcoin Cash 9 karat gold. All other coins 1 to 9 karat gold plate. I guess that's talking about, people are saying that there's an unlimited amount of Bitcoin. There really isn't. The original blockchain, if it remains the preferred blockchain, there's only 21 million in that. And anything else after that is not Bitcoin. It's some derivation of Bitcoin. And it's a dilution of Bitcoin. Just like you can dilute gold. It's not an exact analogy, but obviously it's not the Bitcoin. Here's an interesting thing. Goldman Sachs, drawing away from JP Morgan, who called Bitcoin a fraud, they say they're weighing a new trading operation dedicated to Bitcoin and other digital currencies. This is a comment I like. Lloyd Blankfein, who is the CEO of Goldman Sachs, he says, I'm still thinking about Bitcoin. No conclusion, not endorsing or rejecting. Know that folks are also skeptical when paper money displaced gold. The reason that's significant is who liked paper money over gold? Bankers. They love that. It enables them to commit fraud. The old way was people had gold, it was gold, and there was no third-party risk. You had the gold in your hand, you went and you bought your stuff. And then they introduced gold notes. And they said this equals amount of gold, so you traded your $20 gold note instead of your $20 gold piece. Well, what happened was they realized that you don't necessarily have to have the $20 backing the gold note, because no one's going to go in and grab the gold, try to redeem it, or if they do, they'll have enough there because they can fractionally reserve against it. Well, you can see how the wheels are turning in Lloyd Blankfein's head. He's thinking, okay, digital currencies, cryptocurrencies, yeah, we can make a scheme out of that. So we'll see. I think that the banks are going to fully embrace Bitcoin and all the other cryptocurrencies. They're going to use them to make money. They're going to use them to trade derivatives. They're going to integrate them into the payment system. I know it not what Bitcoiners want, but I think that's what's going to happen. The story is about India, with help from the World Gold Council, is going to set up this physical gold exchange where you can sell your ancestral gold. So it seems to be a way of getting the gold that's traded in India more centralized, so the government can figure out what's happening to those 18,000 or so estimated tons that are in individual hands. They weren't able to get the Indians to turn them in for the bonds, but now I guess they figure they can get them to sell them on this exchange. We'll see. That's supposed to be 18 months. I haven't gone through the details, and I'm not going to until it's more ready to be launched. In the meantime, we will be releasing the reports on the Indian gold and silver imports for the month of August later this week. So please subscribe and get ready for that. Here's one for Salivate Metal. I didn't send this one to him. If he's listening, you might want to cover this. Salvage firm hopes to net gold worth 125 billion pounds sunk by German U-boats. You have these companies, they go out there and they raise money from investors, and they figure out ways of going into the ocean and to the ocean floor where they think these ships are, and then they manage to extract the gold that might have been on, or silver that might have been on the ship when it sunk. Apparently there's still many out there, not just from World War II, but also during the big period of the New World exploration, especially by the Spaniards who were shipping silver back. A lot of those ships, hit off the rocks in the Caribbean, or they got into a storm and they just sunk. And they look through old records and they try to figure out where these ships might have sunk, and then they try to go and get the silver or gold. here is, I just linked to this, and the link right here is the Shanghai International Energy Exchange crude oil futures across the market testing. It just shows how China, this I think it's from June, is planning to launch this Yuan denominated oil futures contract. There's no mention of gold in it. And then, of course, people are telling me, but contacted my subscriber to my mining stock journal who happens to live and work in Shanghai. Okay, so now someone lives in Shanghai. They know what's going on in the gold market just because they live in Shanghai. He sent further evidence, and the evidence he sent was this link I just showed you. China's working toward launching a gold-backed yuan futures contract. That's not what that says. It says they're working towards a yuan-denominated oil future contract. No mention of gold. So I responded, I have a contact in the alternative financial media in the United States that says we're going to run out of silver in 2016. The dollar dies in 2015 and COMEX defaults in 2013. Just because somebody lives in the United States doesn't mean they know what's going on, and obviously, in the financial markets or the gold markets. And just because some guy in China lives there and sends you a link that says nothing about gold doesn't mean that it's evidence that China is going to launch a gold-backed oil futures contract. Now here's the story here. This is Hugo Salinas Price. He's on the story that the gold isn't gonna, they're not gonna drain the gold out of China. They're not gonna use the Shanghai Gold Exchange for the gold. They're gonna go and source this elsewhere. And this is another type of King World news, shock the world, rock global markets. Yeah, it's gonna ignite World War III. I think the reason he's saying he's right. China just decides, we're just going to back everything with gold. We're going to pay for everything from gold, including oil we get from Saudi Arabia. Yeah, that would ignite World War III. Also, Japan's not interested, however, in World War III. The problem a lot of gold promoters have is they think that everything that China does, everything, has to do with them dethroning the dollar and buying gold. China's got a lot of problems. World War III is not one they want to add to their issues. They're meeting, as I mentioned, the next couple of weeks. They're trying to figure out how they can keep their entire country growing, and also how to keep the people from rioting. It's very difficult to plan an economy, especially one which covers 3.6 million square miles. I mean, it's a huge country. It's got billion or more people, and they have 250 million people that have moved over the last few years, 10 years maybe, from the country into the city. And then they've got these ghost cities. They've got an enormous issue with trying to figure out how to make this all work. If they're not only focused on buying gold and crashing the dollar. All right. This one here. Yeah, the dumping treasury stories is old. As we've shown, and we'll show again on the 20th of October, the amount of treasuries that foreigners are buying is on the increase again, including China. Now, some are saying that China's buying. Well, of course, they don't want to buy them. They don't. But U.S. treasuries are collateral. They're like an asset, even though they're debt. So if China can show that they have those assets, they have better credit, oddly enough. But that's the way it is. So China's adding to its treasury position, not dumping treasuries. Here's something. Strategists predict Bitcoin digital trading volume will soon surpass Apple's. Well, that's not something that's lost on Goldman Sachs, JP Morgan. They make most of their money and have since the 80s from trading. Okay, so they want to do trading. And if there's trading being done in Bitcoin and digital currencies, I don't care, even if it is a fraud, as Jamie Dimon says. If it's a fraud, well, they want part of it. They want to trade too. I don't buy these arguments. They're going to make it illegal and arrest everyone. It just doesn't make any sense. If they're going to arrest anyone, they're going to arrest people who are making silver coins with anti-government slogans on them and confiscate that before they're going to shut down. And I don't think they're going to do that either. And shut down this cash cow that's just developing every week. It looks like Coinbase adds a few 100,000 more accounts. This is worldwide. It's legal in Japan. It's legal in Australia. China will probably relaunch this whole thing. There's money to be made in digital currencies. It's a banker's dream. It's out of thin air. They can create them, everyone can create them, and everyone can trade them. What is there not for bankers to like other than it is against the fiat currency? Well, they can co-opt that. They can bring that into the fiat currency, into the payment system. Well, they still try. 11 Zeroheads gives us these reports. This is a great update. ECB bought 1.7 billion in corporate bonds. This isn't a week. This is the ECB. They're buying corporate bonds of private companies, and now they've bought $114 billion worth of corporate bonds. This is QE. Now they're going to run out of corporate bonds to buy, and that'll be just in time when the Fed starts unwinding its balance sheet. So as the Fed stops reinvesting its, as their treasuries that they're holding run out, the Fed says, we're just not going to buy them. Well, all right, they're not going to reinvest that money. Well, ECB will do it, I'm sure. Bank of Japan will do it, I'm sure. Swiss National Bank will do it, I'm sure. Everyone's going to be buying treasuries. Everyone, all these central banks, all they do is buy each other's debt. And now they're buying other companies, corporate bonds debts. Well, here's a point why you don't want to back the yuan with gold. It just makes the yuan go higher, which means then China can't export as much. They don't want that. These companies will import less from China and more from others, says Anas. I can't pronounce his name. I'm not even going to try. So in a sense, they'd be dumping yuans in this case. Yeah, and I think that's China's plan, boost the yuan to slow their economy to a crawl, which means they could buy less oil for gold. That doesn't make any sense. Alert. Well, here's my reason why U.S. silver sales are down. Investors switch funds to gold-backed yuan, analysts say. Game changer, right? Here's your story in, I think this is CNBC. China in lockdown ahead of most important meeting in years. I don't think people get what China is. This is the largest centrally planned economy in the world. People criticize the United States, the Fed, the ECB, the interference. You got to remember, a year or so ago, China banned short selling. They banned cryptocurrencies. They're all over their economy. The whole thing is centrally planned. China has come to a standstill after 1 week public holiday, but that will continue ahead of Communist Party Congress. This is a massive, total, centrally planned, totally controlled economy that is bound not to work out. I don't care what their gold plans are. This was an old story, but I just ran across it. Now, this one was saying that the Perthman is considering a ban on clothing containing metals, including underwire, broads, and bids to security. And this was not the headline. I think someone very clever at ABC Net Australia. Let's see what the actual headline was. That was not the headline. But someone, when I clicked on it to tweet it, it says, Perth Mint workers feel unsupported over proposed bra ban. And I think that was someone who had gone into the Twitter feed and changed it, because the original headline was, Perth Mint staff may be forced to wear work-issued bras to improve security. And someone went in and changed it to, when you go to tweet it, to Perth Mint workers feel unsupported. Ha ha. Oh, someone still has a sense of humor. Yeah, there's just an argument here. Well, I want to know from the people that were involved in getting, who were quoted, like Luke Roman, Alistair McLeod, and Grant Williams. How did this Nikkei Asian Review story come about? Did the reporter call them directly? It would be odd that he picked those three to call. May pick one of them, but somehow to pick all three. Or did they call, or did one of them call the Asian Nikkei Review? Because Coase Jansen called or contacted the reporter. He said there's no source for the story. So is it from the imagination of those who were contacted? Or did they contact the reporter and give him this idea? See, this is the problem I have. This whole story could be 100% true. I don't really care. What I care about is that it just comes out of nowhere and everyone just starts talking about it, and then they start changing the story, which means you can't trust what's going on in the story. So who contacted whom for the story? And if we're saying there is no gold-backed yuan, then did the people that were interviewed let the author know that and say, hey, this is not a gold-backed yuan. This is some convoluted three contract. They take Yuan, they then take the Yuan, go to the Shanghai Gold Exchange, they buy gold, and then they short the gold. Is that what's going on? I don't know. So here, like Grant Williams says, it's a strategic move, swapping oil for gold. And again, the story is China is expected to do this. Well, by whom? Expected by whom? I just want to know who is the source of this story. Is it from Chinese officials? Is it from the people who are quoted in the story? Or does it come from the author? If it came from the author, why didn't the people who were quoted tell the author that this is not a gold-backed yuan, if some are saying it's not a gold-backed yuan? All right, let's see what else we have during the week. How is it that a journalist in Indonesia manages to track down Luke, Alistair, and Grant for an interview for what China is expected to do? I don't know. And I did a poll, why won't China launch a gold-backed oils futures contract? And gold can't leave China. Can't agree on that $13,000 price. Would start World War III. The story is fake. I say the story is fake. All right, what else do we have here? No sources. I think we spent enough time on that. Let's carry on. Now, I like this quote. I don't like everything Martin Armstrong does, but this is a quote he made. They keep praying for the collapse of the dollar to make gold go up. That explains everything. That is the cheerleading that goes on. All this dollar collapse, dollars days are numbered. That's all based on somebody who holds gold that wants that to happen, without really thinking through whether it will happen, how soon it might happen, what the consequences would be on you. Just because you have a few ounces of gold and the dollar collapses, you're not going to be able to buy anything anyway. The whole thing doesn't make any sense. This whole there is a group of people that wake up every morning and think that China wakes up every morning how to collapse the dollar. Like that is a good thing. Dollar hegemony, dollar hegemony, dollar hegemony. That is like a mantra. Dollar collapse. It's been predicted for 60 years. It's predicted for 40 years since we left the gold standard. But it's predicted to be imminent. Dollar dies in 2015. Dollar collapse. There's a whole industry talking about a dollar collapse. And yes, one day the dollar will die. It will end just as the people will die that are promoting the story, just as I will. But the idea that it's always imminent and that when it happens, you're going to be a big winner because you have gold. Okay, let's continue down. We got a few more stories. I'm sorry that I lost the track here of where we are. We talked about no sources. Yes, okay, back on track. This is a quote that I subscribe to myself, and I repeat, I didn't put it in these words that Coach Jansen did in a comment to one of his articles. We don't need lies to make a case to invest in gold. Bingo. All these stories that people get all excited about, the shocking this and stunning chart and shock the world, rock the gold market, all this nonsense actually, I think, scares people away from gold because they think the people that promote it or own it are out of their minds, because there are very solid, rational reasons to hold precious metals. And thank you to Coach Jansen for saying we don't need lies to make a case to invest in gold. He wasn't even talking about this. This was a couple of years ago. He wasn't even talking about this gold-backed yuan or COMEX default or sovereign-sized gold buy in 45 days to shock the world. Yeah. Now, someone also I saw in the same comment, they wrote, I'm in full hysteria now. Where do I send my money? That's exactly what all these headlines do. They're designed to get subscriptions. You sell books with it. You sell ancillary materials. You sell all this stuff. You sell precious metals. You get subscribers. I get it. And when I call it entertainment, some people get mad. It is entertainment. I understand you may want your news with a bit of entertainment. But do you want your news with a bit of made-up stories? Now, here's, interestingly enough, Egon von Greyer's in King World News was asked by Eric King about this gold-backed yuan, and he very rationally stated, well, we haven't confirmed that yet, which is true. But then he went on to say, and Eric went on to say, this is the fake but accurate, but it all makes sense, like this is going to happen. So you keep giving credibility to these stories once you accept the premise that, yes, China has gold, and China's been buying gold, and what are they going to do with it, and why else do they have the gold, and, you know, they are going to do this Yuan-denominated oils contract, so they might as well back it with gold. Yeah, maybe. But I'll stick with Mr. von Greyerz said before they continued down that line of reasoning. It hasn't been confirmed yet. To me, that's end of story. If it hasn't been confirmed yet, okay, speculate all you want. But don't insist that it's going to happen, or say China has announced, as someone else did. They haven't announced anything. Or if they have, I haven't seen it. And I've been searching around looking for an announcement where China has said, wherever China is, where some official source out of China says that they're going to back the yuan with gold. Now here's one. This is the kind of thing that drives me nuts. When I see this, here it is. Love them or hate them, those Germans are a smart bunch. Now there was a story that said that Germany, in the World Gold Council, Germany had become the world's largest gold consumer. I scratched my head and said, that doesn't make any sense. We know that individual Indians are buying physical gold. Well, what the Germans are buying are these exchange-traded commodity funds, like ETFs, but only the German version. So they're not buying gold. But anytime you hear these stories, love them or hate them, those Germans are a smart bunch. As if because they buy an exchange-traded commodity fund, they're smart because it has to do with gold. I just point out most of the gold the smart Germans buy is in the gold-backed exchange-traded commodities market. Now, the people that are calling Germans smart, rightfully the ones who say that ETFs, ETCs are not really buying gold. You're buying a claim on gold, and not even a claim on gold, you're buying a claim on the gold price. Because you can't get gold out of most of these ETFs. And you can't trade them 24/7. You can only trade them when they're open. And if indeed there is a crisis and they shut the markets down, you can't get anything. You can't even trade your price of gold. So I don't think anyone's smart for buying gold. I certainly don't think anyone's smart for buying an ETF, a gold ETF or ETC. But this is the mentality that you see, is that somehow gold makes you smart. No, it doesn't. There's a lot of morons who buy ETFs and ETCs. Now, this is a Jim Ricker. This is an exact, this is the article. You can link to it. Here's where he says, China has announced. And I'll give you the quote a little further down. But he doesn't say where they announced it. Doesn't link to it. You know, he read the same Nikkei article probably as everyone else. That's not inside information. Yeah, so here's another story. This one is in Gold Broker. The dollar is going to zero. Wake up, America. Yeah, as I mentioned, it is going to go to zero maybe one day. And you're going to die too one day. But when is all this going to happen? Everyone says it's imminent. I'm not so sure about that. The reason it's not imminent is the whole world has a vested interest in propping it up. China too. So it's nice to see here. There was a story from Kyle Bass where he was saying, basically what I said, is that the bubble is in ICOs, not Bitcoin and Litecoin. And he mentioned there's a lot of fraud going on in the ICOs, but that the cryptocurrencies actually, maybe they're a little overpriced in his view, that they might have a future. And that's my view, is that the cryptocurrencies are different. The ICOs are pie in the sky. This company is going to do this, is going to do that. It's no different than .com. Just because it happens to be crypto doesn't mean it's going to do anything. It's going to take your money, and that's about it. Interesting story. Why is Fidelity mining Bitcoin and Ethereum? Well, there's money in it. They mentioned that. But they said that the real reason they're doing it, besides the money, they want to learn more about it. Of course they do. Fidelity has 70 million customers online. They see Coinbase has almost 11 million. They don't want Coinbase to be taking all that market of trading. Fidelity wants you on their platform trading Bitcoin and Ethereum too. And Litecoin. I always forget Litecoin. Yeah, so here's Luke Roman. He's subscribing to, or just asking the question, what happens when 1.8 trillion Chinese imports begins settling in gold? And now he's gone beyond just the oil-backed contract where China goes out and, this is the Yugo Selena's price link here, where not just China buys oil with gold that they source from London, but they start buying all their commodities. Okay, what happens? Yes, that's what China's going to do. They're going to start buying everything backed by Yuan. Now, here's Jim Rickards. Now, he laid it out pretty clearly what his view is, although it's not sourced anywhere. There's no announcement. And what he says actually makes sense, is that China is going to, I think if you click on it, I think I said it so you can listen to it where it is. Anyway, it starts around 19, 20 minutes if this doesn't work properly. He says that the oil producers will sell their oil to China in yuan, and then if the oil producer doesn't really want yuan, have the option of them buy that gold with the yuan on the Shanghai Gold Exchange that China will set up for them. And then if they're concerned about the price of gold not remaining constant, i.e. in dollar terms, think that one through, they can hedge the gold on the Shanghai Gold Futures Exchange. So that's no big deal. It basically just, it's almost circular that they want the value in dollar terms to remain constant. They want the value of what they're buying to remain, of the proceeds they get for the oil to remain constant. And again, this is not a gold-backed yuan, what Jim Rickards describes. Now, he didn't say it is. He just said he explained what it is. The gold can't leave the Shanghai Gold Exchange. It is what gold bugs call paper gold. But I was amused here because Jim also made the same gold makes you smart type of comment. He says, now why are they doing this? Are the Chinese stupid, or do they see something most people don't? And this is something everyone says, why is someone buying gold? Oh, they must be smart. Someone's buying gold. Oh, they're smart. So here's the inside scoop from Jim. They're definitely not stupid. I spent time in China. Some of my best friends are Chinese. I know a lot of people there. They know what they're doing. Okay, that's the inside information. So Jim went to China, and there's some smart people in China. And there's probably a lot of morons in China, too. And there's morons everywhere, and there's smart people everywhere. And I don't separate people's intelligence based on whether they like gold or not. But in any event, that's what people do. All right, the rest of the news here, the silver update, the gold and silver U.S. Mint sales update, atrocious sales. You can check them out. I've done individual posts on the U.S. Mint and gold and silver sales. I haven't released the Buffalo sales yet, but they were terrible. The Perth Mint outsold the U.S. Mint. That's very important. That Perth Mint, little old Perth Mint outselling the U.S. Mint by 6-1 in gold and 2.1 in silver. And there's, you can check those out. They're on the web page. You can click and check out all of the updates on the gold and silver sales at the U.S. Mint. You can also buy gold or silver through the links below. Not investment advice to do so, but you can compare pricing and shipping from a number of our affiliated links, and you pay no more no less than if you visit those sites directly: SD Bullion, BGSC.com, Money Metals Exchange, and Golden Eagle Coin. Check them out and compare pricing and shipping. And if you do buy, Smaulgld gets a small commission. Also, you can buy Bitcoin via the links we have on Coinbase. You can sign up for a Coinbase account. You buy $100 worth of Bitcoin. You get $10 worth of free Bitcoin, and Smaulgld gets credited for the same. Again, not advice to buy Bitcoin, Litecoin, Ethereum. But if you're going to buy, you can do so through those links. And I think there's your Perth Mint sales. There are your links. Now, I was on Rory Hall's the Daily Coin Show. Interesting conversation we had on silver deficit. Not going to go through that there. You can go to his site. You can go to his YouTube channel, or you can check out the silver deficit blog post I put up on the Smaulgld site, or on this particular blog post, and check out our 45-minute interview. I think we're coming to the end, and yes, we are. So thank you very much for listening, and we'll talk to you during the week.